good morning, everybody. I am here. um, pinning the link in the chat. I don't know why every time I get on here, my throat go to acting crazy. That must mean I'm doing this too much and I need to take a break. Hey, good morning, good morning, good morning. The link is in the chat. The link is in. Oh Lord, I see Robinson in there. The link is in the chat. The link is in the chat. The link is in the chat. The purpose of the link is if anyone wants to pull up and ask a question, if anybody want to pull up and share anything, anybody except for Robinson and Cooley. Anybody else is welcome to pull up and ask a question, and welcome to pull up and share anything you want to share. Good morning, good morning, good morning, good morning. If this is your first time tuning in to Tim's Tidbit, I'd like to say welcome. If it's not the first time tuning in to Tim's Tidbit, I still want to say welcome, and I want to give you a hearty thank you for always pulling up. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day, and I just talk about the price action. I talk about the price action dealing with the S&P 500, or the ES, if you will, or the SPY, if you will, or the SPX, if you will. All of them the same thing. I talk about the S&P 500 because I'm primarily a swing trader that swing trades the SPY lean, as I like to call it. And I get on Al Gore's internet and I talk about the price action every single day because it helps to plan for my swing trades on the SPY and share little tidbits along the way for day traders who want to see what a full-time trader would do in any situation. My primarily trading style comprised of a conglomerate, if you will, of ICT concepts that I learned. I've paid for many courses over the years. Well, I'm gonna say over the years, over the past 2 or so years I've been doing this, learned a lot of stuff for free, and that's what I choose to stick with. So I share my thoughts on it to hopefully inspire somebody else to become a full-time trader, or just take what they learn here and then apply it to their own investing or trading, or so that nobody can pull the woolly cloth over their eyes. If they hire somebody to do it for them, they'll have the tools needed to know that, hey, you're not doing it right, my guy. And I do it all for the free 99. Only thing I ask you to do is press the like button. Right now, with that being said, people still be hitting me up every day, every single, I ain't gonna say every day, but several times a week. I be getting requests for people who want to talk to me on the phone, talk to me on Skype, talk to me. I keep telling y'all, I'm giving you everything I got to give on Al Gore's internet every day for free. But since people want to keep talking to me, first of all, you ain't gonna talk to me on my phone. This ain't no shot at nobody. If the cousin who sent me the DM yesterday, I don't know if it was yesterday, because I happened to log into my Instagram and somebody sent me a DM. I don't be on Instagram like that. If somebody send me a funny link on Instagram, I look at it and I get off. But if I happen to see a DM or something, if I happen to poke my head in there, I will read it, but I might not respond. Anyway, this ain't no shot at you, cuz if you on here watching this, you're not talking to me on the phone. You ain't getting my phone number. At the end of the day, I'm just an internet dude, and y'all just internet people too. I ain't getting you my number. You feel me? That's just. I'm 50 years old. I ain't got time to sugarcoat nothing for nobody. Now, with that being said, I've decided that I will open back up my one-on-ones, but you don't have to get a one. Matter of fact, I hope you don't get a one-on-one, because I'm retired. I don't feel like working, but I get on here every day and I give all that I got to give on here. But if you just want to sit down and pick my brain, or if you feel like you just want a one-on-one, I've decided I'm doing 3 tiers of the one-on-ones. The first tier is just going to be you already a trader and you comfortable with it, and you just want to chop it up and verify what you already know. That's going to be the first tier. The second tier going to be you know what I'm saying, you kind of eye with it, but you either want to learn how to do, you know what I'm saying, options or futures or whatever. And then the third tier is going to be for like newbies, you know what I'm saying, and it's going to be that one right there is going to be like a three-part Like three one-on-ones in one. Just one where we go over all the basics. Two, the second one, we get together and try to put together help you put together a plan. And then the third one, where we just, you know what I'm saying, we sit down at the end and do an action after review. That's how I'm gonna set it up. But I'm really hoping nobody, because I don't want your money. I want you to take your money and put it in the market, because I'm giving you everything I got to give right here every single day. You do not need a one. Y'all already know it. Trust me. I know you feel like you don't know it. I know you feel like stop second guessing yourself. You already know it. Stop asking me for one-on-ones. Stop trying to get one-on-ones. You don't need, you already know it. Everything that ICT done said, everything that I done said, everything that the homie PDub done said, everything that Lex done said, everything, anybody who you Zay, anything that Zay done said, anybody that you listen to on the internet, they have told you everything you need to know. You already know it. But if you insist on wanting to pay for a one-on-one, I will be reopening the one-on-ones, but you already know it all. Trust yourself. Trust the process. I get scared clicking buttons. The fear is never going to go away. That's why you have risk management. You're going to lose sometime. Lose quick and let the winners run. And take profit along the way. Let's see who in the chat. Here to learn to share. Good morning to you. Wait, let me check on the birds. Yep, the birds are chirping. What's up, FC? What's going on? Cool it now. Hey, watch out. What's going on, Blue Eyes? Hey, Blue Eyes. Oh, no, that was Blue Face. That was Blue Face they were saying was shooting at somebody. That not Blue Eyes. I'm sorry. That was Blue Face. Okay. What's up, Levern? Again, what's going on, Robinson? I'm going to be nice to you today, Robinson, because you was nice yesterday. What's up, my guy? Again, the link is in the chat. The link is in the chat. The link is in the chat. Regina. You remind me of a West Side Story. What's going on, Kareem? What's going on? B word when I start showing. Rhonda Green, what's going on? What'd you fire me for, Pinky? Break him. Break. What's up, Valdez? Oh, hold up. Is Angela in here? I don't see Angela here. Angela out of here. Good morning, Valdez. Buenos dias. How are you? Hola, que pasa even? Michelle Tucker. What's going on, Michelle Tucker? My number is 777-9311. What's going on, Sanjay? What's good? Hey, what's up, Stacks? What's up, Thomas? Mr. Chung, if you will. I'm sorry about that. Pronounce your name wrong. I tear people names up. What's up, Mendez? Hello, Anna. Hello, Elsa. Uncle Tim says hello. Good morning, Queen. How are you? What say? What Blue Eye say? Yes, second guessing yourself is the devil. Mama say second guess yourself is the devil. It isn't the knowledge, it's the execution that's most difficult thing to. Exactly. I'm glad you said that. The execution it's not that it's difficult to master, it's difficult to do. The execution is difficult to do. It's easy to learn, it's easy to know it, it's easy to build confidence in the strategy, but when it comes time to do it, whoo, them feet get cold. Ooh, them feet get cold. You feel me? What's going on, Christina? Christina, why are you looking like this on your picture? Yeah, I do. That's like Christina looking on there. It looked like them braids laid though. You better make them eat cake, baby. That's probably what she's saying. And they are. Hey, let's get into it, man. Them all the names I see in the chat, so that's all I'm gonna say right now. Let's I didn't even share my screen. Let me share my screen. Share screen. Hey, Christina, if I compliment your head on me, you can stay on my screen. Get off my screen. Let me see. Share screen. Let's get right into it, y'all. Let's get right into it. The overnight price action. That's why we here. Looking at the way we went down, the market acting like it's starting to break down. Mind you, we got a lot of PDAs down here to the downside. We're sitting right now on top of a 4-hour breaker. This stuff we marked out the other day when we were saying it's a lot of stuff in the road right here. It's an hourly order block, right? We've come a little past the mean threshold of this hourly order block right here, right? Let's verify that. I'm gonna turn my snap off for just a second. So come in here, line it up. Yes. So we're past the mean threshold of this hourly order block, right? We've completely filled in this 4-hour fair value gap right here, and we got equal low. No, it's not equal lows. We took that low out, so we're right at the bottom of the 4-hour fair value gap right there, and we're sitting right at the top. The bodies of these candles are sitting right at the top of this 4-hour breaker. Right, that's what we have come down to thus far. We have a lot more going on as far as PD arrays. As you see, we got a huge liquidity void on the hourly right here. From there all the way, we got a huge liquidity void on the hourly right there. We'll break that down a little bit later, but let's get into the overnight price action. Okay, before I took the boys to school, I was getting ready to start like resetting up my chart, and as you see, I moved my weekly low back to last week's low. And the reason why I moved it back to last week's low, because I moved it to this week's low the other day, because we were just consolidating and dilly-dallying right around this area here, right around equilibrium of the premium. We right around, let's just say this 4,005 area. We was pretty much consolidating in this small little range here. So I moved it up to this week's low, which was right around the top of, no, it wasn't the top of that. It was up a little higher because we've come down now. So I ain't gonna try to remember where it was. Might have been up here where this white line is there or something. Anyway, I moved it back down to this low here because on the weekly level, that's the first weekly low that we get to that's below price right now. So that's why I moved it down to this weekly low, right? It looks weird, like it's way over here by this week, but we made the weekly low like in the beginning of the week. So it's like, again, the candles, they be marked on the platforms I'm used to. They be marked with the time that it finished. You see what I'm saying? So this right here is showing November 11th, right? And November 11th was the Friday, right? But we made the low like back on the 6th or the 7th. So that's why that line is way over here like this, close to the November 4th candle, because November 4th was a Friday. And so if we made the low on the 6th, then that's why it's really close to that candle right there. So just want to point that out, like, hey, Tim, why you got that line way over there? If that's the low, it's on the low on the lower time frame. So it's sticking way over there like that. Don't want to confuse anybody. And I probably just did by doing that. So that's why I moved it down to that weekly candle right there. Now let's get back to what we was talking about, the overnight price action. As you see, we got we're We've just got into this day. Remember when I was like, there's a big daily fair value gap that I wasn't going to draw out because I didn't want all that stuff on my chart. I was just drawing out like the most important stuff that I was watching at that time, which was this order block, this hourly order block, this 4-hour fair value gap, and this 4-hour breaker. We've come down to the 4-hour fair value gap and the breaker, and we're getting a slight reaction. Don't know how much of a reaction we're going to get. Do the algos bounce off this breaker? You know what I'm saying? Go up a little bit and come down. Do it bounce off this breaker and keep going, or do it, you know, forget the breaker and flush through and fill in this entire daily fair value gap, trying to get the market back to fair value, you know what I'm saying, on the daily level, and then bounce off of this 4-hour mitigation block, or this day we got a daily mitigation block there too. Remember I said I'm not going to mark that one out. I had already marked out the 4-hour. I was like, I'm not going to mark this one out because I already marked that, and we'll just readjust it if the market start to come back down to there, right? So that's where we are now. And plus we got a daily breaker here too. I said I wasn't going to mark the daily breaker because I had already marked the 4-hour, and I was just keeping an eye on this daily fair value gap right here just to see how price play out without junking up my screen. Now that we've recapped all of the PDAs to the downside that we spoke about before, now let's go look at the overnight price action, right? We're going to put it on. We're going to go to, we'll go to 60 minutes. I was going to go to 15 minutes, but we'll go to 60 minutes. So the close right here. So we closed at 39.69.50. Yesterday's close was at 39.69.50. The 1700 candle we pushed up, came back to this order block right there. This order block that we set on the 1 o'clock candle. If your platform shows it at the beginning, that would be the 12 o'clock candle for you. So for me, the 1 o'clock candle, that'll be the 12 o'clock candle for you that we set this order block on the hourly. Pushed up to that order block, came back down. Then at the open, at the Sydney open, we gapped up. This is the 7 o'clock candle for me, 6 o'clock candle for you. If it does it at the beginning, we gapped up a little bit, consolidated for a little while, and then right around the 9 o'clock candle, we started to sell off, right? So in this 9 o'clock candle, it's 8 o'clock. So I think that's the Asian open. I think Sydney open at 6, and then the Asian open at 8, if I'm not mistaken. So at the Asian open, we started to sell off, right? We started to sell off, and then just kind of consolidated once we sold off a little bit right near yesterday's close, right? At midnight, at the 12 o'clock at midnight, we took off. Pang-ow! Let's see how far we went. How far up did we go? Let's use some of the ICT tools. Let's get a fib. Let's get us a fib. Put my snap back on. We're going to use some of the ICT tools. So let's look at the central bank dealing range first. So the central bank dealing range is from 1400, right? So at 1400, this candle closed at 1400. So 2 o'clock. So boom, we're looking at from this candle here, because this candle closed at 2 o'clock. So this candle opened right there. So at 2 o'clock, this is where price was at. We're looking at the lowest body and the lowest wick. I like to start with the lowest body to the highest body up until 8 o'clock, right? So at 8 o'clock, this candle started at 8 o'clock. So that's where the price was, right? So up until that time, this would be the highest body because this candle started at 8. So this would be the highest body. This would be the lowest body. So from the lowest body to the highest body, we went just above 1 standard deviation of the central bank dealing range, right? So that's some ICT stuff. So with the with the candle bodies, right, from midnight, we made a beeline to right at one standard deviation, give or take one standard deviation, and that's typically the daily high. If we make a beeline like that to go to one standard, anywhere from 1 to 2 standard deviations up to 3, ICT say that's typically the daily high, and the reverse is the same. If we made a beeline after midnight straight down, and that would typically be the daily low because we made it during the London. So from midnight to the London, if we make a beeline straight to 1 standard deviation or 2, whatever, you know what I'm saying, of the central bank dealing range, that's typically the daily high or the daily low if it's made during London. That's, you know what I'm saying, that how it works out. A lot of times it don't have to be, but that's a good gauge for you to use using that central bank dealing range, right? And then also he talk about something about the flout. I don't really understand the flout, but it's something with when you look at from the central bank dealing range. I think it's either from 0 GMT up until midnight, or the central bank dealing range up until midnight, and you look at the same thing, but it's like 50%. And so it's like that's like 2 flouts. And you know what I'm saying? So 2 flouts would be like, you know what I'm saying, 1 standard deviation. So you got like 1, 2, and then, you know what I'm saying, when you get back to the top, that's really 1, 2, 3. So that would be like 3 flouts. I don't understand the flouts that much, but I like to look at like when it ain't giving me nothing, I'll look at like from 0 GMT, right? I'll look at 0 GMT, which is right so I'm GMT, I'm UTC -5. So 12 minus 5 be 7. So right here at this 1900 candle, whenever this candle right here close, right, that's the close of that candle. So I'll just look over here and I try to go to the highest body during that range to the lowest body during that range, and then I'll use that area there to see where we at. If price just kind of consolidating, I use that for like my daily range. I'll use that sometime. I don't know if I got that from ICT or not, but I'll go from like 0 UTC to midnight when it ain't giving me nothing really. You know what I'm saying? How this is just obvious. We made a high and we died off. This is obvious. When it don't be obvious and we just consolidating here, I'll start looking for like equilibrium of the day based off from, you know what I'm saying? Because this is like the 0 UTC is the start of the day. When you see the daily candles, it's the start. 0 UTC is the start of the day on the futures. You know what I'm saying? So I'll go from the start of the day up until midnight if it ain't gave me nothing during, you know what I'm saying? That's that's how I start looking for my like dealing range to see what the L goes in. If we just can't consolidate and tight, I'll look for to see if it's respecting the premium and the discount within this little range right here from 0 UTC up until midnight. I went into all of that because all we did was pretty much go up, make a high, and died off. It wasn't a whole lot to say as far as price action wise. So we went 1 standard deviation up above the central bank dealing range, which was right at yesterday's. Yes, we went right up to yesterday's mean threshold. That's what this white line was right there. So we went 1 standard deviation up from the central bank dealing range, which would put us right at yesterday's equilibrium, and then we sold off. From the 4 o'clock candle all the way up until now, right? I did see I was riding, I looked at the thing on my phone because I like to see what the market does when the news come on, when the job numbers came out and whatever else came out today. I saw a little pop-up. It wasn't nothing major, but I saw a small pop-up. And I was like, that's gonna be of nuts right here. See, it was like a small pop-up right there. Right, that little small. I said I knew that was going to be insignificant as far as, you know, what was going on now, because we had died off so much. Now, looking at what we got going on now, again, the market is looking heavy, but we do have some PDAs above us. Let's point those out real quick. Let's go up to the 4 hour first. Go up to the 4 hour first. We still got 30 minutes on this 4-hour candle. So if we don't get back up to here, if we don't get back up to 39.50, 75 before, oh, the market is open, the market is open, the market is open. If you got to go trade, I appreciate you for hanging out with us. If you're going to trade, trade safe. If you're not going to trade, please take copious notes so you can go back and study what you saw today. I ask that you hit the like button on the way out the door. And I forgot to tell everybody about the series, but thank you for tuning in. And please check out the ICT Concepts Explained series if you haven't started checking it out yet. Now, we're working on a 4-hour fair value gap right there. This candle is not, I don't like marking this stuff when the candle's not complete, but I'll go ahead and mark it anyway. I'm going to go ahead and mark it anyway. There, this 4-hour fair value gap. If I have to adjust it later, then I'll just adjust it because we still got 30 minutes on that candle. We have a, you know what I will mark? Instead of marking that, I'm going to mark this right here, because we came down, made a low, went up, did not break that high. Boom, came up, didn't break that high. So this right here is going to be a mitigation block right there. And of course, I don't have one. Yes, I do. Yes, I do. Okay, so and that's an order block right there. Also, we got a bearish order block right there in that same spot as this mitigation block. We're getting a nice reaction off of this either this fair value gap or this breaker, something. We're getting a nice reaction off of this right here. I'm going to move this order block because we then went all the way through. We either get a nice reaction off of this 4-hour fair value gap or this breaker. Not sure which one we're reacting off of, but we are reacting off of one of them. We got I ain't gonna mark that yet because it's not, the candle's not done. We have an hourly fair value gap here. Got an hourly fair value gap there. Hourly imbalance. All right, hourly fair value gap there. Got a hourly bearish order block right there. Very small one. When they be small like that, I really hate marking the bodies of them really teeny ones like that. I really do hate marking the bodies of those teeny tiny ones like that. I might drop down lower and see if I can find something on the lower time frame that's got a bigger body than that. And we got a breaker. We got a breaker inside. We came here, made that low, went up. So this counter, that counter, this right here is actually the breaker over there because that's when we made the low. So when we came down, made the low made the high. So these two candles right here starts the breaker. They're engulfed inside this 4-hour mitigation block right here. All right. So we came up, went there, came down, went there. So we got an hourly mitigation block, an hourly breaker, all inside this 4-hour mitigation block right here. So I'm just going to leave it at the 4-hour mitigation block right there. Let's go to the 15-minute real quick. We're kind of consolidating here at the bottom. We touched this 15-minute order block right there. Let's see what happened with that. We've come back up to a 15-minute order block there. We kind of getting a reaction off of it. Let's see if we if we respect it and go down, or if we push up and look for some more stuff, because we got a 15-minute mitigation block right here that I'm not gonna worry about marking out. But there's a 15-minute mitigation block there. This, okay, there you go. We got a bigger breaker right there. Right there. Man, like, I don't like marking those small breakers. We got order blocks. I'm sorry. I said breaker. We got a bigger order block right there. I don't like marking those little teeny tiny order blocks. All right, so we got a 15-minute order block right there. And that order block is right next to this 15-minute mitigation block right there. Boom. So we got a 15-minute mitigation block right there and a 15-minute order block right there, which is a nice size. So we came up to this 15-minute fair value gap right there and sold off. So we came down, we had a breaking market structure here. We got a fair value gap that we haven't revisited yet. Came down, made another fair value gap, hit that fair value gap, moved off. I wonder if it's gonna set up. Remember when ICT, I can't remember exactly how he did it, but it's like we had like a move, we had a breaking structure with a fair value gap that he was like, we don't expect that to fill. Then when you come out of that fair value gap, you make another fair value gap, and then you sell off of that, and then something become a measuring gap and all of that. I got to go back and look at that video. I can't remember all the details of it. All the deets. I'm on a 5-minute chart right here. We had a breaking market structure right there. Set an order block right there. Came down, hit that fair value gap, pushed down, had a breaking market structure, came up back to the order block there. Looking pretty heavy. Let's see how this play out. It's looking pretty heavy. The market, excuse me, in this area right here. The news, see on the news, we just popped up to this fair value gap and pushed down. Now we've come back up to that same order block area. Still looking pretty heavy. Let's look at all three indices. The Dow is getting close to this hourly fair value gap here. We got a huge hourly fair value gap. Man, the NQ is nowhere near it. The NQ is in an hourly fair value gap way up here, but the Dow is like a lot heavier, a lot weaker than the NQ. The Dow is all the way down here at the fair value gap that was made on the 10th of November, the 10 o'clock candle on the 10th of November, and the NQ and the ES is nowhere near there. Is nowhere near there. The Dow is like down. It's leading on this hour as far as strength. As far as strength wise on the hour, the Dow is leading, but the NQ and the ES are lagging way behind. Matter of fact, on the hour, the ES is the weakest on the hourly candle. The Dow is the strongest on the hourly candle. The ES is the weakest on the hourly candle. And the NQ is like in the middle. But the Dow is the weakest overall because the Dow is all the way down here at the fair value gap on the 10th of November. Let me mark my New York open, and then I'll check out the chat, see what y'all talking about. New York open was 39.17 even for the New York open. 39.17 even for the New York open. Now, put this back on 15-minute candles and check out what y'all talk about in the Chizat. A 15-minute order block still holding for now. Still holding for now. Let's see how it continues to play out. You remove order blocks when you remove order blocks when we trade through it in one direction and not both directions. Like with order blocks, with order blocks, once we go through like 50% of the order block, right, and once we start disrespecting the order block, as I say, or once we use it or trade through it, I take it off, because the order block is a reference point, is not an imbalance, right? There can be there can be an imbalance inside the order block, but the order block itself is not an imbalance. It's a reference point. So I'm not looking for the order block to be rebalanced. You see what I'm saying? This is just a reference point where the algos know this is a spot I want to come back to for a reason. And once they come back to that spot and react off of it, you out of there. Yeah, I don't need you there no more. You know what I'm saying? I'll just keep it in mind that it's there. I take it off for clarity's sake, but I keep in mind that it's there, like, because y'all always hear me referencing back to the market maker sell model and buy model, right? Just like this order block over here, I took it off the chart, but I remember that it's there because when we came back, as you see, we were like respecting it. You see what I'm saying? I took it off the chart, but I remember that it's there because, okay, we're respecting it. And then like this order block over here, right? Now on the opposite side, right? When we come to the opposite side of the thing over here, we got, you know, order blocks over here. We got a nice breaking structure here. We got a breaker inside here. We got a nice breaker inside here. It's all lined because order blocks can turn into breakers. Order blocks can turn to mitigation blocks. You know what I'm saying? It don't have to, but it can. So it's all the same family in the same side, on opposite side, should I say, of the sell model or the buy model. So I always keep them in mind because they're reference points that the algos will come to repeatedly, but I'm not looking for it to be rebalanced. So I just delete it off for clarification's sake of not having a bunch of junk on the screen. And like, I only want to see the active PDAs because I start getting confused. Like, because as you see, like when you make a breaker, or if you make an order block, right? When you start dropping down to the lower time frames, you start seeing candles that's going all through it, and you be like, man, why is this here? Like I got it marked way back here, but I got a bunch of candles going through it. But this mitigation block didn't get made until this candle right here closed, right? Or maybe even this candle, because it's depending on the time frame. So one, like this candle right here might have been the closure of this 4-hour range that made this mitigation block. But like on the lower time frames, it looked like we done traded through it a million times. But when it didn't really get made until maybe this candle over here closure. You see what I'm saying? So that's why I try to keep the current PDAs on my screen so that I'll be like, okay, we still need to go back to that, even though I see candles going through it. Or, you know what I'm saying? But I don't wait for it to get rebalanced because it's not an imbalance. It's a reference point. Hopefully I didn't confuse nobody with that. Y'all ain't saying a whole lot in the chat, man. So I guess that's it. I guess that's all I got. Since that's all I got, let me go over here. I should have did this in the beginning because most people don't stick around this long. Let me like my own video. Hey. I know I saw upwards of 40-something people on here when I glanced at one time. And it actually say 40 people watching right now. Now I just switched to 39. Somebody ran. I was number 21 on the like. I hit like and I was number 21. Right? Now it's going up to 27. Man, I feel like I do all right. So somebody hit like so that some other cousins can see this information, because I don't promote this on no other social media. You know what I'm saying? I'm trying to put a free asset out there. I need y'all to hit the like button so the algos think y'all like what y'all watching and it is show it to other people. If you don't know, or if you haven't seen, I started a 3-part series called ICT Concepts Explained. I ain't trying to get no clout off of ICT. I ain't trying to jack his stuff. Because when I get on here, I explain the stuff that I learned from ICT in a way that makes sense for me, right? I only do live videos. These live videos run an hour and a half sometime. That's a lot of stuff to try to skim through and find the gems. I don't expect anybody to go back and look through an hour-long live video to try to find gems, right? So what I've decided to do is make a 3-part series where I just go in and give all the gems that I know in small bite-sized chunks. What, Tim? What do you mean small bite-sized chunks? I'm glad you asked that question, little Timmy Rogers. The first part of the series is lingo. That playlist is up. Second part of the series is price action. That playlist not up yet. Third part of the series is strategies. That series not that playlist ain't up yet. When you go to the lingo playlist, right? There's 8 videos in here, right? Relatively short. Some of them, it range from 6.5 minutes. The longest is 10 minutes and 13 seconds, right? So, and y'all love that breakers, by the way. The breakers got the most views. I don't know why, but y'all went crazy on the breakers, right? The overview, it's an overview of what the series is going to be, plus some common terms that will be used throughout every strategy, every price action, everything, right? And then the rest of the videos are the separate PDAs telling exactly what they are. It's just an introduction to the PDAs, what a mitigation block is, what a breaker is, what a liquidity void is, what a fair value, blah, 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 right? And then when you go to the videos, right? If you go to the videos, the very first link in the video description, it says download slides. If you click on that, it takes you to a Google Drive folder with all the slides for all 8 videos. If you want to download the slides, they are free. You just click on the link in the description of one of the ICT concepts videos, and it take you to the same Google Drive folder. It don't matter if you're watching video 1 or video 8. The link is going to bring you to the same folder, and you can download the slides for free. If you want to follow along, if you just want to have them for your notes, whatever. There go. That's how it works. And then part 2 of the series is going to be price action, where I go through and it's going to be separate videos again, and it's going to show how to find mitigation blocks in price action, the bullish and the bearish, how to find breakers in price action, the bullish and the bearish. Because on these here, I might just be showing a bearish. I might be just showing a bullish. But the price action is going to break it down, how to find any of them, how to look for them, what you're looking for, why you're looking for it. And then the strategy is going to be separate videos again on how to use a mitigation block in strategy, how to use fair value gaps in strategies. You know what I'm saying? Different strategies, but it's going to be all the video going to be only dedicated to mitigation, only dedicated to breaker. So if you want to know all of the concepts that I use, you can look at all of the videos in every series. If you only want to be a breaker trader, you go to the lingo section on breakers. You go to the breakers section. I mean, the price action section on breakers. Then you go to the strategy section on breakers, and you got it all from inception to execution in small bite-sized chunks. It's still going to be on you to go do the work, go back test, go practice. But I'm just putting it all in bite-sized chunks so that people don't have to come back and look at hour-and-a-half long lives between me in my squirrel moments, and I run off and I get into it in the chat with Robinson and what he said. See one like on my screen, and that's you see what I'm saying? You see what I'm saying? Hey man, but I appreciate y'all, man. That's all I got. Take advantage of the free resource. This is all you need. These free videos I'm putting up, this is all. You do not need a one-on-one with me. You do not. I will open the calendar back up. I ain't saying I'm going to do it today, but I will open it back up. But you do not need a one-on-one with me. This is all you need. You already know it. You already know it. You do not need a one-on-one. Because the one-on-ones ain't free. You hear me? One-on-ones ain't free. You do not need one-on-ones. This is all you need. I've been kicking and fighting and scracking and scraping, whatever, trying not to do one-on-ones because I want you to get it for free. I don't know how many times I can say it. That's all I got. I got to go back to the dermatologist because I still, let me check my email before I say that, because they still ain't sent me that school excuse for Chris. Jim Cramer, only a few hours left to get this offer. They still ain't sent it. Rashad and Troy, earn your leisure, and the master investor talk crypto collapse, Kanye West, market Mondays, and more. These emails that I got. Nothing. I got to go all the way back to the dermatologist. I forgot to get a school excuse yesterday, and then I called them. They said they was going to email it to me. They never came. I called them again, left a message, called them again this morning. She was like, oh my God, Mr. Rogers, it didn't come through. Here, I'll send it again right now. And I still ain't got it. So now I'm gonna have to drive back up there to get it so I can take it to the school. What you say, cool it? Man, you gave a gem when you spoke to that 45 minute. Oh yeah, that 45 minute, that's been nice. I've been peeping that. I ain't added it to my arsenal. I just been like watching it. I just been looking at it. But yeah, that is fire. That is fire. It's all about and that's another thing I want to say. I was in the Discord. It's a older Discord that I was in from with PDub, and somebody was talking about time frames. And I was like, man, I ain't gonna hold you. Don't put so much emphasis on different time frames. Figure out what fits your trading style, and you already know it. That's at the end of the day, that's all it is. You already know it. Because the time frames, the only thing that the time frames give or take away from the scenario is it has to do with your risk tolerance, right? The lower the time frame, right, you'll be able to lower the risk, right? But the lower the time frame, the more precise your entry has to be. The higher time frame, you're going to have to widen your risk, but the less precise your entry has to be. So it's all about what type of trader are you? Because if you're a swing trader, right, like me, I'm a swing trader, right? I may make an entry off my swings on a 15-minute time frame. I may well do that, but my overall thought process is I'm giving it the risk to like a daily swing low. So if let me go in and illustrate this to you, right? So let's put it on daily candles, right? Right, let's put this on daily candles, right? Let's say I want to, let's say I want to get a swing. Let me come to a space where the price action is already moving. Okay. So boom. Let's come to these daily candles. We're going to come here. We're going to come here like this right here. Let's say, right, I want to take, give me a rectangle. Let's say I want to take a trade off of this daily mitigation block right here, right? I want to take a trade off this daily mitigation block right there, right? For a swing trade, right? For a swing trade. Now, if I set my order for, like, I got to go to work, right? So I set my order in my platform to say, whenever the price get to right here, right? Whenever the price get to right there, we're just going to say, we're going to pretend like this is the option price. So whenever the price hit, what's the close of this candle? 37, 32.75, right? Boom, I'm buying, right? So now, let me get me another rectangle here. Control copy, right? Turn my snap off. Y'all bear with me, right? Change the color of this. We're gonna make that yellow. Yellow and red gonna be, this is our first order, right? Boom. So we come in, all right. Soon as it touched the top of this mitigation block, I'm going in, and then I'm putting my stop below this low right here, right? So boom. That's me entering. That's me entering off of like a day trade, like from using the daily time frame, right? Copy this right here. Move this over for a second while I drop down so I don't lose my place of where I am. All right, now go down to a 15-minute. So I'm gonna get down to a 15-minute. Now I'm on a 15-minute. All right, let's see if we can find some kind of entry or something. Okay. So now I can move this out the way. So let's say, boom, right here. We're just gonna make this quick and easy. We saw it coming down, and we anticipated this being a turtle soup. When we came down here, we saw this come down right here. We anticipated this being a turtle soup, and we said, boom, we're just gonna buy. We're gonna buy below this low right here, because we anticipating this to be a turtle soup. We're just gonna buy. As soon as we break this low, we getting in, right? Boom, right? As soon as we break that low, we getting in. We anticipating that being a turtle soup, right? So we anticipating it being a turtle soup. So we say, okay, we anticipating this to be a turtle soup. So I'm going to give it down to equilibrium right here. I'm giving it to equilibrium because I'm anticipating this to be a turtle soup. But if I'm wrong, I want to be wrong. I want to know I'm wrong very quick. So I'm only giving it to equilibrium right there, and to let me know if I'm wrong about this turtle soup, right? So boom. Now mind you, the targets are still the same to the upside, because we got our day trading objective, right? But look at the difference in the risk. See what I'm saying? Got this amount of risk for this amount of reward. The reward is still up here, right? The reward is still up there because this is the low-hanging fruit. We're coming down. Low-hanging fruit right there. The reward is still up there. So now look at the difference in the risk to reward. Right? Now, you got the difference in the risk to reward, and we got a better entry, right? So we got a better entry, we got a better risk to reward, right? Because we only giving it to equilibrium because we going in with a turtle soup, so we giving it less risk. We like, hey, I want to make sure I'm right. And then matter of fact, looking at where we are here, right, with this turtle soup, you could even argue the fact that you'll just give it to the mean threshold of this order block over here, right? Be like, okay, we're coming down to this order block. If 50% of this order block fail, I want to know right away, right? That's a realistic trade, right? We're coming down to this order block right there. We're coming down to this order block. If 50% of that order block fail, I want to know right away because I'm taking this on a turtle soup. So now look at the risk to reward on this right here based off of the entry style, the entry time frame style. See what I'm saying? It's the same trade, the same target, but we're looking at entering on a 15-minute, but keeping in mind the daily, because it's a swing trade. We're keeping in mind the daily aspect of it. So when you enter on the lower time frame, right, you're going in and giving yourself a very small risk because you're giving yourself time for it to play it, because you're not going to get scared if it don't play out the way you want it to play out, right? Because remember, you're entering off this mitigation block over here, right? So you're not going to get scared. You're just giving it to the bottom of this, 50% of this order block, right? And if it, you know what I'm saying, if it go against you and stop you out, right, that lets you know right then, hey, you know what I'm saying, it may not be time to get in. We may come all the way down to this order block right here, and that's giving you time to take a smaller loss to get back in here, whereas up here, you had to take this larger loss. You know what I'm saying? Even though it was your loss, you just had to take this larger loss. It took you longer to realize you were wrong than it was over here on the on this time frame, but you still kept in mind the day trading aspect of it, where boom, you know what I'm saying, if I was wrong entering on the lower time frame, I was going to lose less than if I entered on the daily time frame, if I couldn't sit here and watch it all day long. You know what I'm saying? So it's not so much about this time frame is better than that time frame. It's like, what is my trading style? Why am I getting into this trade? And what is the price action saying? You see what I'm saying? Learn your style, learn why you're getting in the trade, and learn how to use the time frames to mitigate your risk. You know what I'm saying? Set it up on the higher time frame and use the lower time frame to get your entry if you're afforded that opportunity. But if you're not afforded that opportunity, just trade it off the higher time frame. But remember, you got to give yourself, you got to have the risk tolerance of that higher time frame. And with that, I yield my time because I got to go back to the dermatologist. What's that about the university? Don't get me started with the new university hike. What's that? What did I miss? What did I miss? Battle scoring. I missed something. Oh, Bullard. Oh, okay. Bullard just said he sees rate rising to 5 to 5.2 at a minimum. Stay flexible in your bias. Period. Period. Always. See what my shirt say? Always trade what you see. Always. Always. You're welcome, Cool It. You're welcome, Cool It. Miss Maxine, I yield my time. I yield my time. Hey, I appreciate y'all for hanging out with me, man. Hopefully I said something that helped somebody. Like I say, man, y'all continue to like it and share it with other people so other people can tap into this live stuff. I like talking live. You know what I'm saying? I like talking live so I can just get it off my chest quick. You know what I'm saying? The pre-recorded stuff is nice. It's cool to be able to go get the gem you need and get out of there. But I like interacting. I like seeing what comes to your mind and I can speak on it. If I oh you talking about that right there. Okay then. um if I could speak on it, I'll speak on it. If I don't know, I'm gonna keep a hundo with you. I don't know. I don't know everything. You know what I'm saying? I'm a student of any craft that I'm in. You know what I'm saying? Any from music to videography, photography to trading, I study. I got to know the y'all see all them books on y'all see all them books on my shelves back there. And this book right here, let me see. No, not that one, the red one right there. That book is made especially for Robinson. It's called Read Between the Lines. Hey man, I appreciate y'all, man. If y'all gonna trade safe. If you're not gonna trade, please take copious notes so you can go back and study later. And when you decide to jump off the porch and go live, we're gonna be here to support you. We're gonna be here to celebrate you. We're gonna be here to wipe your boo-boo when you get scraped up, because we all get scraped up. Y'all already know I'm getting scraped. I got stuck in some trades the other day. I'm getting scraped up bad on those. And then I throw me a Hail Mary, you know what I'm saying? And it's working out for me right now. Matter of fact, I need to go out there and mitigate something. What's that cool? Hold up. Y'all hold up. I'm by myself. I just heard something. I don't know what that was. I don't know what that was. I don't know what that was, but I heard something. I'm home by myself. You feel me? Hey Tim, the way you broke down time frame entry just now, is that going to be part of the execution playlist? Sure. Yes. I will put that in there. See, this kind of stuff I be saying. The feedback. Give me feedback so I know what to include. And yes, I'll put that in there. I'll put that in there. I'll add that in there as far as like entries during the strategy time, the strategy section. That's not funny, Robinson. That's not funny. Hey man, I'm about to get out of here. I got to go get this excuse because it's not coming through my emails. It's not coming through my email, so I got to go get this excuse to take to Christopher school. I'll see y'all tonight. Let's say the magic part of your bookshelf disappeared when it did when I came out. Oh yeah, like Harry Potter. Yeah. The cloak. That's the cloak. Okay. Got the cloak. Okay. Hey, that's the door. Y'all see the door? Y'all see the door over there? There go the door right there. Y'all see the door? That's the door right there. Oh, that's my dad. I ain't never show. I'm gonna show y'all a picture of my daddy. I'm gonna show y'all a picture of my dad. Hold on. Show y'all a picture of Po Knob. That's a cool motor scooter, right? The lights on there. Hey, here to learn to share. Get off my screen, here to learn to share. What you doing up there? That's a cool motor scooter right there. I got the lights all in there. Okay, yeah, that's better. Yeah, that's Larry Rogers right there. That's a cool motor scooter there. Look at there. Which side I want to get on? The light on that side. Shining all over the place. I'm making it worse. Okay, yeah. Y'all can see, I guess y'all can see it. That Po Knob. My sister gave this to my sister friend. I can't remember my friend's name, but he did it. He did it like some years ago. He did it from a picture of my dad. They was she sent it to him. He did it's like a chalk drawing or whatever, but it was a picture of my dad, and he was at his cousin's house some years ago, And he always had on a hat, always had on some shades. Oh, Po Knob. They say I look like him. Do I look like him? Hold on, turn my face. Do I look like him? Y'all think I look like him? Y'all think I look like Po Knob? I can't even get my head right. Everything reversed on this camera, man. Yo, man. That's old Larry Rogers. Old Larry Rogers. Old Po Knob. Yeah, man. I just thought about that when I moved the thing back. I could see it back there on the wall. But anyway, I appreciate y'all, man. Just a scared dude. Oh, your daughter artist? Yeah, she can draw good. I like supporting people. If your daughter can draw good, I pay her to draw something for me. I like. Matter of fact, a dude from Columbus here. He drew that picture of my wife up there. I don't know if y'all can see it. He drew that back in 2018. That picture of Calandra up there. He drew that in 2018. And then for Christmas, I got one of her and her mama from the same dude. And then her mama passed away February 2020. And then on Christmas 2020, I got her this right here. He drew this on Christmas 2020. Her and her mama. The same dude that drew the one back there. His name Real Tunes on social media. He from here in Columbus. His name Darian something. I can't remember. His name Darian or something, but it's Real Tunes on social media. But I got him to draw this for Christmas 2020 because her mama passed away February 2020. And then I thought it was dope because he put like these. Calandra had on a necklace, but it was a journey necklace that me and the boys got her. But on the picture, he made one of them. He made a heart. And like he put like half the heart on the mama and half the heart on Calandra. You know what I'm saying? He made them little hearts because her mama didn't have no necklace on. But I just thought that was a nice touch that he put on the picture. But yeah. But I be supporting people, man. I support our people, man. So if your daughter got skills, man, let me know. I send her a picture and I'll pay her to draw the picture for me. Gotta be nice now. No, you know what I'm saying? Don't be coming out here with no picture pages. Hey man, I'm trying to get out of here so I can go get this thing. I'll see y'all tonight at 6:30 for the price action recap. Gone.